Hi, Nehal. Thank you so much for joining us on Blitz Business. It's a pleasure to have you.
Thank you. Thank you so much, Ashish.
Awesome. Let's get started. So, Nehal, please let's begin with tell us a little bit about yourself.
So I am Nehal Gupta, 27 years old. I was born and brought up in Delhi. Went to the US to study supply chain and finance in 2015. So I was in America at the Kelley School of Business at Indiana University for about 4 years. I had a very short stint at another company called Cummins, where I was working for about a year until COVID hit. So until COVID, I was in America between 2015 to 2020, and then I decided to come back, be with my family in Delhi, and that's when AMU came about, and we ideated the whole business. So I am a very young and recent entrepreneur, and there's a lot of my background goes into what my company is now and what we have built. So yes, that's my.
Wonderful. Did you ever thought from the beginning you wanted to do a startup, you wanted to work in corporate? What was that thought process?
Not really. I mean, as a child and growing up, I belong to business family. So we have multiple generations of businesses in the family. But I always knew I wanted to do business. I wanted to be within that space. But having my own startup or having a particular dream of running a specific startup, that was never there. I went to business school to study business. I was surrounded by a lot of people who were part of the business fraternity. So there was always, I guess, part of the DNA. And then when this opportunity came about is when I was able to activate really what I've been longing all this while and put it to use.
Awesome. Awesome. So, tell us a little bit about the company. What got you thinking, and does your background play a role in it, or how did the sort of idea sort of span into? A lot
Right.
of questions.
The company is called AMU. We stand for Accelerated Money for You. We're a non-banking finance company
Okay.
focusing on the niche of electrical vehicle financing and leasing. So the idea, of course, was not thought of over one day. It took a lot of brainstorming, ideation, and it was born during COVID because that's when we had a lot of time, in our hands to research, to understand where the markets are going, what the new India is looking like, and post COVID, of course, a lot of things changed. So I personally wanted to be in a space that was future looking, that was forward looking, that the government had introduced really exciting policies for. So there was a clear idea on being in a space that is tech related, tech oriented, and it's a newer generation business and not something that's been happening over the past multiple decades. And I didn't want to be part of something that's already existing. So that's how AMU came about. We picked a niche of vehicle financing within electrical vehicle space only because there was a very specific niche that not too many people were working with. Since it's a financial services business, there was always that level of comfort that it's never dying down. It's an essential business. It's always going to be the requirement and the backbone of all the businesses, right? So financial services as a sector was very interesting, and then within that, the niche of electrical vehicle was very future looking, sustainability oriented, and somewhere where not too many people have dabbled with. So seemed like the perfect combination to start this niche. And historically, across all the NBFCs, if you see the trend in India that were even born, decades ago, they all started with having a niche, and then they expanded their diversification or their product diversification, etc. So we were very happy with that niche. We got great demand. We were not really, struggling to find customers or markets to enter in this space. So there was a very positive start we got as a company, and then we just took it forward by God's grace. We've now grown to a larger size than what we started, and we're healthy, we're profitable. Seemed like it was a good product market fit, and it's working well.
So, how does this electric space financing works for you guys? Is there a particular ticket size you have when you
Yeah.
guys go out, or yeah?
Yeah, so there are two different markets. We have B2C and B2B. B2C is where we lend directly to the borrower, the individual borrower who wants to buy an EV. And these are typically two wheelers and three wheelers. Because we, as an NBFC, again, by picking a niche, the idea was not to work only with revenue generating assets. So any vehicle that makes money was the idea, to finance any vehicle that makes money, right? So in the B2C space, we work specifically with women borrowers for two wheelers, only for women borrowers, and for three wheelers, we give it to for autos, rickshaws, etc. So any driver who wants to take a vehicle on finance and then make some kind of revenue out of it, generate money out of it, and that's how they service the debt that we give them through a vehicle lending program. So it's a vehicle finance, typical vehicle finance on consumer loan, facing the direct individual borrower. And then we have a B2B segment where we service MSMEs who want to run a fleet of electric vehicles. So it can be two wheelers, three wheelers, four wheelers. Like we work with Blue Smart, we work with fleet operators that want to run two wheelers and three wheelers for last mile deliveries, mid mile delivery, first mile delivery, delivering goods to consumers, etc. So those vehicles are now turning to be electric because the government has a solid push and these companies have certain ESG, SDG goals. So we try and work with these MSMEs that deploy such electric vehicles, and we are the ones financing their fleet. So we have two sets of borrowers, and then so the ticket size, 10 years, rate of interest, it changes with each asset class that we do. So a two wheeler in B2B looks different versus a two wheeler to an individual woman borrower. Three wheeler in the individual space where, say, an individual walks in at the vehicle dealership, wants to buy an EV. We are a finance option present at the dealership. They choose the schemes that we offer, and then we give them a vehicle loan through our app, and then we have agents on ground as well.
So what's a typical like a ballpark interest rate you guys charge?
I mean, see, being an NBFC, we're quite expensive because, of course, we can't compete with banks in this space. And a large part of the segment that we work with is new to credit. So we work with the underbanked sector where their credit scores could be -1, or even the businesses that we work with are mostly startups. So taking that level of risk, having that appetite, in the beginning, of course, rate of interest can be good, but 300, 400 bips higher than what banks offer. Can also go it's certainly a little higher than that, given how risky the market or the asset class is. So for a four wheeler, of course, it's cheaper. For a three wheeler, it's more expensive. Three wheeler underbanked customer who's never been given a loan before, it may be more expensive because we add certain risk premium cost and pricing to our charges. So a typical range would say be between 20 to 24% average, and can go up a little bit depending on the class of customers we work.
And then typically what happens in the case, like, I mean, like two-wheelers specifically, some of them have a lot of tons of complaints in the market. And,
Right.
that must be impacting guy like you, like companies like you in terms of the vehicle is just not working or these sort of issues. Does it impact or no?
See, we had been very cautious about the OEMs that we work with, the manufacturers that we work with. So, ground feedback, after sales services, dealership service network, those things are very important when choosing an OEM, not solely the sales data that they may have. And picking a market where individuals or companies are not using these vehicles to make money out of, we don't work with those people or those markets. We typically try and stay within the commercial vehicle space because passenger vehicle, one, we can't compete with the rate of interests that are offered by banks, and two, the servicing aspect of an OEM, the responsibility today is reduced because it's only one consumer complaining versus one MSME complaining where they have thousands of vehicles given to them for a fleet building, right? The level of service level agreements, the negotiation power that you have is very different. Companies are still adapting to the response time to give to individual customers like us. But if a company goes that has bought 1,000 vehicles, 2,000, 5,000 vehicles, and they're really pushing heavy volumes to two or three different companies, and we work with such companies, they're bound to sort of service you. They can't, at that point, take it for a toss and not service you. So there was a very careful choice to go into that market. And two wheeler overall within the newer manufacturers, it's risky today. We don't entirely trust the newer OEMs that have come in this space. But of course, the legacy ones, like TVS is doing really well in the two-wheeler space, and like Bajaj is also introducing EV soon in the two-wheeler space. So I'm sure that those kind of OEMs will bring in their legacy and their expertise. The newer ones, I think, are still trying to make their ways, but there's a long way to go to build that level of credibility among consumers.
And not even Ether.
We have done Ether, we've done Hero, we've done Bigos. There are a bunch of other newer brands that have also come in the space. Ether's been performing quite well. Their aftermarket services are good, is why even the challenges that come in the beginning, like any kind of teething issues, are taken care of because the OEMs and their dealership network is responsive. Certain other companies, there's a big challenge, beat them really big. There's a challenge with communication, there's a challenge with getting service time, turnaround times for faster servicing. It's a pain. So with a couple of
Yeah.
companies, it's been good.
I mean, Ola had like more than 45, 49% market
Market
share
share. Yeah.
almost
That's why I
last
said,
year.
as per sales data, yes, these companies are
But
large.
that's a big tough call to take, right? I mean, you're leaving a big chunk of market
Yeah.
right out of the door, and that time there was not such issues, or maybe there were some issues coming in. I don't know.
Yeah, see, I think the kind of operators we work with that take two-wheelers for their fleet, like say anyone who's delivering for Zepto, Blinkit, Swiggy, Zomato, these guys also use two-wheelers, right? So any two-wheeler that a fleet operator takes to deliver for Zomato or for any other company, they do their performance and quality checks. They understand customer feedback. They keep the vehicle on trial for multiple months, and so we just not bank on what the size of the OEM is, but we also understand the actual feedback on ground. And it's a very strategic call to leave that chunk of business because uh, recovery for loans is what we do, right? Disbursements or giving out new loans is the most easy job in the world, in my opinion. You like someone, you give the loan. You don't like someone, you don't give the loan. You have a template. It may fit, it may not fit. It's disbursement is not really the challenge for us. I think it's the recovery. And when we're doing a vehicle loan, recovery comes from the asset. If the asset is not reliable, it's essentially like an unsecured loan that we don't want to do. So yeah.
Yeah, that's true. I mean, recovery is tough, and you guys are handling it yourself. You don't have like a third
So
party.
being an NBFC, I think most people have it in house. You do take support from outsourced agencies, but so far for us, it's been in house. And we work in tier 2, tier 3 markets also, like Bihar, MP, UP, Orissa. These are our big markets, UP being the largest. So having people locally hired, helping them make connections with the customers on ground, so those things are very important to us. Which is why sticking to certain boring traditional lending practices also works sometimes, and not always a more fintech approach. But we like being a little old school and taking it slow because it's a lending business and not a fintech business.
So this sort of brings me to the question in terms of, so you mentioned recovery is like disbursement is easy, but recovery is difficult. Any other part of this business which you thought was tricky when you started doing it and realized later on this is also something interesting that needs to be handled with care or taken care?
Lots of things. I think I run into something like that on a daily basis because I'm still learning a lot. I think was underwriting the batteries of the vehicle. So when I'm doing a regular petrol or diesel vehicle financing versus an electric vehicle financing, the only difference is that there's no engine versus there's a battery and a motor in a car. Right? So how do you underwrite that life of the asset? How do you define how long it will run for? What value after the loan is over the vehicle will have or the asset will have? So everything related to the asset and its underwriting is something that we're constantly evolving. So we're building a lot of partnerships around it. And as and when we're doing more vehicles, we're getting more feedback on ground. We're understanding about more. Certain things are becoming standardized already. Like what size of battery works the best, what cost of the battery should be ideal for a specific three-wheeler or a two-wheeler or a four-wheeler. A year ago, all of this was not standardized at all. People were using any kind of voltage, any kind of ampere, any kind of battery sizes. Now with the volumes coming in, we're able to assess that data, and we feel that it can play a very crucial role in deciding how to underwrite an EV better compared to an ICE, because it's a smarter vehicle than the traditional petrol diesel vehicles that we run today. So that is a constant realization, and we feel that recovery tomorrow for an electric vehicle will directly be linked to the technology of the vehicle and the battery used. So, what kind of access we can get out of it? What kind of data can we get out of it? How better can we understand the vehicle that we are financing or leasing? So, those things I think become very intermingled with recovery, and was a very recent realization that this has to be something that we bank on to move forward and build a USP in financing electric vehicles.
So what's that sort of back of the envelope calculation you guys have for the battery, like 5 years, 6 years, 7 year? I'm sure you must be having that sort of number in your head.
It depends on the different technologies of the batteries used. So, like there's lithium ion, there's lead acid. Within lithium ion, there's LFP, there's NMC. Now people are dabbling with sodium ion also. So, depending on the technology used, there's different use cases for that specific battery. But typically, the ones that we do in three wheelers and two wheelers last somewhere between 3 years to 5 years. There's extended warranties, guarantees, then there's AMC support given by companies. So, combining everything, say up to 3 years for lower asset class and for a high speed vehicle, up to 5 years. Then we've also recently done buses. So, for buses, it can go up to 8 years also, the battery life with the warranty guarantee, extended warranty guarantee, etc.
Eight
Because
years.
OEMs.
How does 8 year works? Like for a bus, why is the duration is so long? Is it battery
It's
size?
because the battery size is bigger. So it's directly your service times or your tenure of the battery, residual value of the battery. Everything is related to the size of the battery, how big your battery is. So there's voltage and there's ampere, right? You see 100 ampere, 150 ampere, 200 ampere, then there's certain voltage. So these batteries typically run on a 48 volt times about 200 ampere to 250 ampere, 280 ampere at best. So these are under 10 kilowatt, 12 kilowatt hour batteries. And the size for the three wheeler batteries is only say 3 years. But a bus, that battery size is only 600 kilowatt, 500 kilowatt, 400 kilowatt hours. That can give you a range of 800 kilometers. And these are heavy duty vehicles, so they require a bigger battery as well. Which is why bring the total cost of ownership at with a diesel or a petrol vehicle, you charge upfront for the battery because battery is 40% of the cost. It makes the vehicle expensive. But giving a longer duration tenure paces that total cost of ownership out.
Hmm.
You're sort of recovering that cost for 8 years, or you're getting service warranty guarantee for 8 years for a product that you've paid heavy upfront for. Because otherwise they have no sales pitch. If you're giving only a 5 year tenure or a 5 year service warranty guarantee, you're charging them 2 crores for a bus, nobody's going to buy, right? So there's to be some negotiation with the OEM, and that's where their expertise comes in. And then financiers like us or even larger banks can then make a call on do they trust the battery? What if the company is giving it for 8 years? Do we give the loan for only 5 years or 6 years? We typically try and keep it under the warranty guarantee period. So it's better for the company, or it's beneficial for the company. As much as they can stretch the tenure, the financiers can follow it and give them a longer term loan than a shorter term loan.
And does the, for example, miles, kilometers also impact in terms of the range of the
Yeah, yeah,
vehicle in
absolutely.
the calculation?
The range matters. So, like a 10 kilowatt hour battery that goes in a three wheeler, for example, can run about say 150 kilometers, versus a four wheeler like an MGZS, for example, can run up to say about 450 odd kilometers, and then a bus which would have a bigger battery runs up to 700 kilometers in one charge, one way. So, of course, the size matters, directly hits the range that you are going to get and the charging times. And depending on the chemistry that you have with the battery.
And moving forward, you see, Nehal, like the prices of battery going down or still hard to guess?
They are already falling down. So when we started working in this space 2 years, 2.5 years ago, the per kilowatt hour rate was about 15,000 rupees, which has now come down to about 6,000 to 7,000 rupees. It's already slashed. Like anything, it's continuing to slash, but that poses another risk for companies like us as we're overvaluing the asset we're financing. So, of course, there's risks when it is a benefit for someone else. It could not be for companies like us. But long term, of course, as it standardizes, goes into more standardization, like I was saying, I think it will sort itself out and there'll be standard prices for lithium ion batteries and it will not be as cheap. I mean, as expensive as people say it to be. It will turn out to be cheap and at par with a petrol or a diesel vehicle.
Quite a number from 15,000 to 6, 7,000.
Yeah, yeah, absolutely. And I mean, even the bus that we just financed, it took 1 year for my client to negotiate with the manufacturer, 1 year, to get the right pricing. They had originally, I think, started at about 2 crores for a bus, but because of battery prices slashing down and those things happening, we didn't want to overpay. They didn't want to overpay. We didn't want to overfinance. So then we got it like by 30-35% cheaper. So those things take time because this industry is still new, which is why there's smaller steps being taken. But once it becomes standardized, I'm sure a lot of people will eye the market then.
So waiting is a good strategy in this
Yeah,
space.
yeah, yeah, definitely. And like getting that first mover advantage, that insight, you anyway want to grow like peacefully, so there's no rush to be, an aggressive player and then just do everything and regret later. So, yeah.
Wow, wow, and very interesting. So, is there any other adjacencies, Neil, you are looking to tap into, or you want to grow the portfolio within this, or you're looking something else also?
We have electric vehicles as our primary vanilla product, if I may. Then within electric vehicle ecosystem, there's other products like chargers, batteries. There's within two-wheelers, three vehicles, two-wheelers, three-wheelers, four-wheelers. There's buses, there's trucks, there's tractors, retrofitment also, which is converting an existing petrol or diesel vehicle into electric on the same chassis. So you basically in the same vehicle, you take the engine out and you put a battery in.
That's also
That's also happening. And that's happening for four-wheelers, that's happening for trucks and tractors, and that's happening for three-wheelers as well. So, given the kind of excitement we're seeing, within the overall ecosystem, not just two-wheelers, three-wheelers, or four-wheelers, we feel that there's enough and more business that can be done within this space itself. And of course, then overall within the sustainability space, solar is very exciting to us. Battery recycling is a space that has been very exciting for us. We're constantly meeting with new companies because we understand that the kind of waste that's going to be generated with this level of push into EVs will also require some level of solutions. Then we have companies approaching us within hydrogen power, solar power, battery technologies, and supporting their financing requirements, right? So the ecosystem is still growing, but there's a lot of joint ventures, consolidations happening with foreign companies within India as well. So we're waiting for that kind of evolution to pick up a little bit before we decide to go into another segment completely. Of course, as an NBFC, it's inevitable for us to diversify. We will have to. We will also have to offer some personal loans or consumer durable loans in the future, but that is going to be a very small part of our book for the sake of diversification. But focus, impact, money, everything will come from the sustainable mobility business, which will be electric vehicles and its ancillaries, chargers, batteries, everything around EVs.
so still you're trying to see how the segment sort of
Yeah,
move.
yeah, absolutely. I mean, if you look at the top four, five companies, NBFCs, that are only doing electric vehicle financing or sustainable financing, the total combined book size of all is not even more than 2,500 crores today. That's it. That's it. These are companies that are doing exactly what we're doing or some part of what we're doing, right? Like top two or three or four companies that I believe we are top three AUM wise in terms of only electrical vehicle financing in the country today. So the two companies above me, one or two below me, combining everyone, we were not beyond 2,500, 3,000 crores at best. Now, if you bring in a bank's book, we were part of these government transactions, a lot of stakeholder policy meetings, etc., for electric vehicle policy that they wanted to launch. And we saw Canada Bank's book, we saw HDFC's book because all their stakeholders were there. HDFC only does four-wheelers and buses and a very small book of two-wheelers. Completely different segment. It's only in passenger vehicle. Canada Bank's total book was only 300 crores in EV. There's not that kind of interest yet or that kind of aggression yet in larger banks. Smaller NBFCs picking up, yes, but not too many focusing only in this space. So it's poised to grow a little slowly, which it should because it's a lending business. Again, like I said, recovering those assets for companies like us. And if you're not able to sell it, what's the point of doing electrical vehicle financing? Because there's not a secondary market for this space yet. So everyone's going slow.
But how is it that number? Because I mean, the sales figure for two wheelers in electric space is like crazy. Like they are growing whatever the number is. People are not getting finance. Is it like,
No,
or
people are getting finance, but the two-wheeler and four-wheeler space, four-wheeler passenger vehicle space, like the cars we use, or two-wheelers that, again, people like us want to use, there's numerous banks and NBFCs for it. You can get it from IDFC, HDFC, SBI, you can get it from larger NBFCs, right? So there's no limit or there's no restriction to finance in those two segments, is why NBFCs don't want to go there. Companies like me will never want to dabble a space where we're the 10th lender or the 11th lender. We don't want to be. So you pick a space where, one, it's harder for these individuals or companies to get access to credit. Two, you can justify your pricing because you're taking that level of risk. With a consumer, your data today would be with the likes of Bajaj, with the likes of HDFC, Kotak, Access. Our data is flowing everywhere. We're constantly getting these offers. At least I am like these pre-approved loans and whatnot. Because
yes?
everyone has exactly because everyone has our data. Everyone has urban city data, tier two also for now at least. But tier three, tier four, smaller states, smaller cities, banks don't want to go. NBFCs don't want to go, and large part of the two-wheeler sales or three-wheeler sales comes from these markets. It's not the urban markets. So there's a big product market gap there, which larger companies find too dirty to go into. If
But
I'm
these messages I never understood. I mean, why they sending, like, if someone needs it, I don't think so. Those people are getting these messages. X amount of loan is ready for you to be utilized or something.
because their data is not one, there isn't enough data, and two, they've not reached to that market yet. There's so much to cater in the urban space. They're making so much out of here. They don't want to go and do the donkey's work in a rural village. Income or operational costs. They're not as tech savvy. So they may have to move out of their digital strategy to cater to clients there. And they've already spent so much on a digital infrastructure that caters to people like us. And then you're making money or going global. Why would you want to take a step down and go, to the dirtier markets or the riskier markets? So a lot of psych behavior and how they look at this market, what is the level of growth in these markets, it's all a function of that. It's not just about, oh, I have the money and I can lend to anyone. You have to be really careful managing the level of NPAs, and then most companies are listed. So you really have to keep your practices clean, your culture clean, the kind of offices you build, the kind of employees you want. Those people are not going to come and work for you if you're opening up branches in a tier 3, tier 4 city. It's not a very glorious or glamorous thing to do, especially for like a fresh MBA wants to sit in a plush office, not want to go in a small branch office in a village or a tier 2, tier 3 city. A lot of factors, and NBFCs typically have historically been called the shadow banks because we do end up doing the kind of work that banks don't want to pick up, or even PSBs don't want to pick up. So yeah, but gives you enough opportunity to make good money. So that's one good aspect. And of course the impact is real because you're seeing firsthand the kind of markets that there are and the kind of people there are.
So what's the NPA for?
We are at a net level, we are under 2%. Um, but also because our book is still growing. So it's not a fair testimony because a smaller book, of course, the dent is also very small. But as we're growing, of course, we've seen certain increase in basis points in the net and the gross, but that's a function of the markets that we're dabbling with. So trying and keeping a goal to keep it under 2% at all times, but I think can hover somewhere between the 2.5% range for sure.
an industry benchmark for this segment is 2% already?
Industry benchmark for any retail lending product, be it consumer loan, personal loan, unsecured loans, vehicle loans, anything in the retail market which is to individual people, typically hovers between 3.5, 4. That is the average. So anyone, directly dealing with consumers. And then you have certain collection strategies and recovery strategies in place that brings your net down to under 2. And then obviously, as per RBI, you have to provision certain reserves and profits for any unforeseen NPAs in the future. So with enough recovery provisions, etc., it always ends up being very controlled, the net NPA, typically across the industry.
And any sort of then future plan, Nehal, in terms of so for example, like there are these I think that one company came also on the podcast in terms of real-time analytics for they basically give lending based on the data which is coming to them, forgetting their name, but any sort of such things happening or you guys are utilizing. There are a couple of lending companies which has come, like one for electric. I never understood why people were lending for iPhone or electronic gadgets. Like, yeah, I mean, their loan book was crazy, but I never understood that. But
No, and
yeah,
it's also very risky, this segment now. RBI is scrutinizing so many companies that does this kind of consumer durable loans because,
yes.
yeah. It's because it's the practices, the onboarding practices of the customer, etc., can be very tricky. So, little bit of a gray area there. But future plans for us, see, in terms of the data that we have today, a lot of it, at least most of it, is first hand. Because if we are literally borrowing or lending to a customer who is new to credit. Their data has never gone to any bank or any financial institution before because so far they've only been dealing in cash or they didn't even have a bank account, right? So that level of data, about 80% of our customers are new to credit. So that level of data that we have today and that we continue to grow with will become, a gold mine for us. How do we go about mining that data? How do we go about cross selling, using that data, leveraging that data? Is yet to start because, of course, so far we have been bootstrapped. We had been, hand to mouth with the resources that we have, and now we're going for a fundraise. We're looking at a large investment amount. So I think once all of that sets in place, we already have a tech team in house, and then we can start leveraging and building a full stack on the app that we have and mine that data as much as we can for the customer's benefit. So I think those opportunities lie in front of us, but we're yet to tap them and get full advantage out of them. But definitely a lot of data in terms of where the vehicle is running, what time it's stopping, what time it's running again, how many trips they're doing, what kilometers they're running, background verification of the customer that we're working with, where do they live, what their family is like, guarantor, co-borrower, all kinds of data points we have because that's required for an underwriting, right? So I'm sure like a lot of larger companies and of course companies like Bajaj, all of them play on data, and data is the backbone of how you can strategize your product diversification and business expansion. So that is the next step for us as well. We're excited to get that going.
And do you keep the loan book to yourself or you pass it off or sell it off?
No, so far it's all on us. There is some transactions happening in the market now that we are able to sell it off or we're able to securitize it, but because it's only EVs, again it's taking some time. A lot of things are new. A lot of people who are going to buy the loan book also will have to understand what EVs are. So that process in itself is taking some time, but I'm sure as and when the industry standardizes, it's going to become easier for companies entering in that space. Because I was reading somewhere, it mentioned, I think it was in the Economic Times, the article was mentioning how electric vehicles in India today have only reached a 5% tipping point. And they've not really come to that level of mainstream adoption that India would like to see. So we're yet to figure that out, that gap is still to be filled. So we're waiting for that patiently. and hopefully it happens in its due time.
And any interesting frauds you have figured it out, which happened with you guys or something like, oh my God, because when you go deeper into the cities like other lending players, fun, interesting stories I've heard. Anything from your end?
Nothing particular that comes to mind, but I mean, it's because I'm a younger-ish entrepreneur for the kind of people that I deal with, and then given that I'm a woman, there's a lot of conversations around that, and which ends up being funny because they're like, "आप इस industry में क्यों है? Why Allahabad? Why Kanpur? Why this state and why that state?" So there's a lot of communication around that. A lot of people that I have to deal with are usually men between the ages of 45 to 60. Trying to work with them. So that way, the dynamic of our relationship and how we try and build respect for each other. That process is quite hilarious because it takes time for them to understand who I am and where I'm coming from, and if I'm even the right person to speak with. And then I have to build my credibility, and that has to happen in a very diplomatic way where I can't, really be that I'm the bigger person here. No, I have to really keep my eyes and hands down and just talk and be humble. So those experiences have been very life changing, I think, if I may, because you learn a lot. You be in different environments and you're experiencing different energies. So that's been a fun part, and I look forward to that every day. I think when I'm waking up, I want to have different interactions every day. So that's been something funny, but otherwise, it's been good. Yeah.
Fair enough, but I can understand. Yeah. Well,
Yeah.
awesome. It was great to have you, Nehal. It was such a pleasure and such a refreshing view. We got to cover some new industry, and thank you for sharing. Anything else you would like to share, which I may have missed?
No, I think just that we are the only woman-led business in this space, in the sector that we're working in. There's no other woman-led NBFC in this space. So that's very exciting for us. And yeah, that's all.
Awesome, awesome. Thanks a ton, Nehal, for your time.